All right. Hello, everybody. My name is David Dowd, and I am a loan officer. I'm licensed in a few states, and that's going to be changing. So check my website for the specifics. However, you can see my information right here on the screen if you want to get in contact with me. But today, we're going to have an Ask Me Anything, an AMA, as it's also known on the internet, kind of session here with my good friend James.
Hey, David.
Hey, what's going on, man? So yeah, he's going to ask me just a bunch of questions that he has about the mortgage industry, and I'm going to answer them as best I can. And my hope is that we'll be able to answer questions that maybe you have floating in your mind. And also, it should be noted that this recording is occurring on this date, and put that here in post. So that way, if things change, because the mortgage industry changes almost every other month, give or take, guidelines, what have you. So anyway, let's get it kicked off here, James. What you got for me today?
What is a mortgage loan officer? How would you explain to somebody like me,
Mhm.
who's a layman? I did buy a house once. It was such a whirlwind. I couldn't tell you how it all worked or who was involved. So, yeah, how would you break it down for somebody like me?
A loan officer or a mortgage loan officer, as I've been saying, is someone who will help to handle the finances of the mortgage transaction. So when you're buying a home, you're going to be the one that helps finance. So when you go to the auto dealership, for example, and then you're dealing with the people in the front of house who are helping to sell the car, and then later on, 3 hours into your visit to the dealership, they're going to be like, "Well, we're going to get you over to our finance guys." So we're the finance guys, but for houses.
That makes sense, right? You talk to the salesperson, right? Which is, I
Mhm.
guess, could be equivalent to maybe like the realtor, right? Who's showing you all the different houses or all the different places. And then you talk to the finance department, right? To actually secure the funding where you come in. In terms of like me, like right now, I am actually, in the near future wanting to look for a house once the rates come down some more. There's lots of ways to buy a house. What would you recommend as a mortgage loan officer? Should I talk to somebody like yourself first, or should I go look at houses real realtor? What are the some of the pros and cons of that? What would that look like?
So, like, what would be a good order of operations, would you say?
Yeah, exactly,
Okay.
exactly. Yeah, I think a lot of people, like you said, who are not buying and selling houses all the time, don't even know what a mortgage loan officer is, and
Right.
don't know whose role they serve. Like, are they serving me? Are they serving the realtor? Are they serving the seller? You could just break down a little bit what your role is in that transaction and what order you can come in. Typically.
So we'll break it down. We're going to unpack that here in a couple of different ways. The
Yeah.
first is going to be the order of operations, because I feel like that's going to be the biggest bang
Oh
for your
yeah.
buck for first-time home buyers or anybody who's getting back into buying a house if it's been a while. With the order of operations, everyone's most likely going to go direct to a real estate agent who can help them showcase the houses, look around, help them look for houses, look for deals. That is most likely what I'd say probably 85 to 95% of people are going to do,
Yeah.
because they want to check out the houses before they buy it.
But
And
that's not the only option, I guess, because that
oh yeah,
I
no.
think that's what I'm trying to figure out. As far as I understand, I think that's the popular understanding, right? Is that you
Yeah,
talk to a realtor, look at a house, and
right.
then the realtor will hook you up, or you have a bank, right? I checking account with Chase or whoever, and then I'll contact them.
Right. That's the traditional common path. I wanted to mention that first. However, there is a different path you can take where, if you happen to know someone like myself who's a mortgage loan officer, then you could take all of your situation to them first. The advantage to that is then we'd be able to look at your credit, we'd be able to look at your assets, we'd be able to look at your liabilities, all of those things. We get all the documentation ahead of time. And from there, we could then create what's known as a pre-approval letter. So that's saying, hey, I've already done all the math, I've already done all the ground footwork for this particular person. And at this moment in time, this is the house that they can afford. And it's already been approved by a lender, a bank, an investor. We've already gone through that process. The only thing it hasn't been is pre-underwritten, but it's been everything else. Go with a real estate agent afterwards, and then you do your house hunting. You find the house, and then at the negotiation table, if you're going against other sellers, you can say, look, I'm already pre-approved to buy this house, because you already knew that one of the things that you were looking for when you were looking for a house was this amount of money, because you were already pre-approved by a lender for X amount of money. It'll save you a little bit of the turmoil of losing out on a house. Like, it's higher likelihood that you won't, unless someone's coming into the door with cash. Obviously, a lot of times they're going to win, but that's not very common. It should be noted. It's like, cool, I went to a loan officer first, I got everything pre-approved. I have a pre-approval letter, and that means it kind of narrows my scope of search because I know what I want, but now what can I afford and what's going to be good for me financially? Right now, I know that too. So then I go into the transaction and I'm like, look, I have all of this homework already finished. Now the search is going to be much more calm because I'm looking for this specific deal. So,
That makes sense. Yeah, coming in prepared, right? It's almost like pre-approval financing if you're going to buy a car, right? You have a pre-approval amount from your credit union or your bank. Want to write something saying, "Hey, I approved up to 36,000. Let me go find a car." That way, when you're shopping, you kind of know you have that stress taken care of, right? You're an informed shopper. You know where your limits are. You know where you can maybe push it, maybe not. Another follow-up question to that is, so during that process, let's explore that a little bit. Let's say I'm looking to purchase some property and I want to talk to a mortgage loan officer first. I want to kind of get my ducks in order and see what options that there are out for financing, see what the current climate is, right, in terms of rates or regulations and things like that. What would that look like? If I scheduled a meeting with you, like our first meet and greet, what would that initial consultation look like? What would I need to bring, or what is the scope of that kind of conversation, that initial one?
if you want to be the prepared customer, then you'll want to bring with you before you even meet the person all of the things that relate to your current situation with how many assets you have. So stocks, bonds, other houses, cars, whatever has value is considered an asset in essence. And so that's kind of a vague definition of what an asset is because if you ask a bunch of different people like what is an asset, they're going to have, a bunch of different answers. But ultimately, it comes to the point of what has value that you could sell to get that value relatively quickly and then use that to make a payment on your house because that's all the lender cares about is that you've got enough margin to be able to make your house payment. And that's the reason they care about assets. So bring that information with you. So proof that you have those stocks, those bonds, crypto, if you want to get crazy, that's fine. That's changing every
Anything
day.
that I want part of that evaluation to involve, like my net worth or whatever, any kind of asset, like you said, I have,
Mhm.
bring some information about, or have an accounting, I guess, of all those kind of categories. So that way, when I talk to you, you
Mhm.
kind of know what we're working with. Is that what you're
Yeah.
saying?
Yes, that'd be the first thing I'd suggest. The second thing, because there's others. The other thing is going to be to bring all of the information about what debts you owe. Those are your liabilities, right? So what do you owe money on? If it's a credit card, is it a vehicle? Is it another home? Is it student loans? It's whatever it is, bring that to the table too. The more transparent you are about your situation, the better that experience is ultimately going to be. And again, I say this from the perspective of just wanting to be a prepared customer. So that way, no matter which loan officer you end up going to, you know firsthand, like, hey, I've got my assets here, I've got my liabilities, and also having an idea of where your credit score falls, because that ultimately is going to be another factor that we have to consider when we're trying to qualify you for a given mortgage.
If I'm a prospective customer, right, and I go and meet a mortgage loan officer for a meeting because I'm interested in buying some property,
Yeah.
you recommend, to be prepared, have an idea of my assets, have an idea of my liabilities, my debt, and just kind of have a general idea of my credit rating, my credit score. Is that correct?
Yes, but the only reason I say this is because you don't know what that loan officer is going to do in terms of what their process is. But if you've got all of your ducks in a row, as you've mentioned, right, that can almost guarantee that that interaction is going to be smooth on your end, like what you brought to the table, in other words, right? You know they're going to ask you for these things ahead of time. So you already prepared it because one of the pain points, I would say, of a mortgage transaction is that the customer gets you information in bits and pieces and it becomes this phone tech thing that can take quite a while. And the thing is, the customer wants to move fast a lot of times, but we can only move as fast as the customer allows us to move. So I want to remove the idea that anything that delays your transaction, something that you could control. Because as a loan officer myself personally, what I like to do in the conversation is to start with asking the customer, like, what is your goal? What do you want to do? A lot of times they may not know the answer to this question, but if you know what your goals are financially, or even like as a family or your career, whatever it is, like what is your big goal? That will help to navigate the conversation on what loan product we should probably go for So you can see there's a lot of moving parts, right?
Well, that's interesting. I've never thought, because I'm thinking almost like a car salesman, right? Like, keeping that metaphor earlier of like
Right.
buying a car. It's like,
Hmm.
well, I want this car, and the finance department doesn't ask me what my goals are or what I want.
No.
But it's a little different. It's a little more sophisticated for a mortgage loan officer, right? Because like there's only a couple of types of car loans, but I imagine for buying property, there's all kinds of financial instruments, right, that can be used.
And that's another thing too. I think this is kind of the outliers direction that I'm talking about too, because you'll come across loan officers, they're just no funny business. Let's just get right to the transaction. Let's get you done as quick as possible. And as you well know, some customers, that's what they want. So I think it's an adaptability thing too. But I think if the person's willing to open up and talk about it, then having the goals in mind, for me personally, is more important because I don't want to get somebody like, let's say, an adjustable rate mortgage. If they're going to be living in that house longer, then that adjustable rate mortgage is going to have that fixed period of time, whatever that ends up being, whether that's like 3 years, 5 years, 7 years, 10 years, whatever the product shows. I don't want to offer somebody that loan product if they're going to be there longer than that time frame, because a lot of times adjustable rate mortgages will use those because they have lower interest rates than a fixed rate. That's just a given. That's how that goes because it's riskier. So therefore, you have less interest to worry about. ARMs are more risky, as they're called. They're abbreviated. Adjustable rate mortgages are abbreviated ARMs. I wouldn't suggest that option if someone's like, well, I'm only going to be here for, maybe 3 years until the kids graduate or whatever. If they happen to know that information, then it's important that I know that. So that way, as I'm looking for options for this particular client, I can be like, okay, I'm going to eliminate those. I'm going to eliminate that, da, da,
Mm-hmm.
da, things like that, tailoring it, if you will.
Which is what you would say is like your job, right? Having that expertise on the mortgage side and the financing side of like knowing what it takes to get certain eligibility, right? Like, hey, if I'm saying I come to you and I'm like, I want to buy $1 million mansion or something like that, or we need this, this, and this, or hey, I'm here temporarily, like I want to buy a house in this area, but I don't plan on settling here long term. How does that affect what houses I'm looking at in terms of mortgage options? I guess one question I had for you, because you
Sure.
mentioned this. So let's say I come to you, right, as a mortgage loan officer, and I'm not really prepared. I'm not the prepared customer, right? Like I just come in there and I'm like, David, I want to buy a house. I've never bought a house. I've been renting. The market's been crazy. This rent keeps going up, up, and up, and I'm tired of it. I
Yeah.
really, really want to settle down and kind of get a place that's my own. What is the first step? Like I know you mentioned what it is I'm trying to do. Well, that's what I'm trying to do. I'm trying to get my first house. Never bought a house before. I've been renting. What are our next steps? What does that conversation look like if we're meeting like and I come to you like that?
If you come to me and you come forward with everything you want to do, it gives me an idea of that goal ahead of time. So at that point, I can immediately jump into, hey, yeah, I want to help you get into that house. So let's go ahead. Let's see what the situation is with your finances. Let's see what the situation is with your occupation, and let's see what the situation is with your debts and everything that you own right now. It makes a person have to open up a lot about things
Mm-hmm.
that a lot of people don't like to talk about, but that's important because lenders aren't going to want to deal with mysteries. Very much like insurance, we're trying to eliminate risk. So if we think of it from that lens, it's very similar, right? They want to make sure that they have a return on their investment, an ROI as they abbreviate it. And so to do that, they want to see that this individual, this borrower, potential borrower, has stable income for at least 2 years. The other thing they're going to want to see is those assets, right? So whether that's certain forms, like if you have rental asset, that's what Schedule E from your taxes. Stocks and bonds, they all come from the taxes. As far as like, where does that proof come from? It comes from there. So you just get your most recent proof of that. And then, of course, your debts, like just having a good idea of your debts, you can just mention it. Like the more open and transparent you are
Mm-hmm.
with those things, the easier I feel like it's going to be for us to figure out what's the reality right now of your financial picture, if you will. Because it's
Okay.
always going to change, right? But
Yeah.
if we're going to come to a lender who's going to lend you, 500 to $1 million, somewhere in that vicinity, and it's going to be a very big transaction, the lender wants to know how risky is this?
So you're saying you would be my point man, my guide to all the different lenders, right? Because you would work with many lenders in your particular setup you have now.
Yes.
In the type of mortgage loan officer you are, right, working as a broker, that affords you the options of really tailoring to the customer, right? Whereas if I go to my bank Chase, I have to be the kind of customer Chase wants, right? I have to fit myself to whatever they're offering. Whereas if I work with you, you're able to work with many, many lenders and find what works best for my situation, right? That would be the primary pro, you would say, as far as working with a mortgage loan officer in your setup versus, contacting my checking account bank?
Yeah, we have more options because it's more like a la carte, right? It's like if whatever brokerage I decide to hang my license with will
Yeah.
ultimately dictate how many options I can offer. Fortunately for me, at this moment in time, I happen to be with Equity Smart Home Loans, and they have a deal with over 150 different lenders. Okay. Plus, they themselves are a lender. They're a hybrid of both a brokerage and a direct lender. There's a lot of options there. There's a lot of flexibility. And why that's a good thing is because you want to have options and you have no idea what you're going to see, right? You're like, I have no idea what I'm going to see. Maybe they have terrible credit, but maybe they've been working consistently and have a good income. There's a give and take there, right? They're like, oh, they have that. They have a lot of assets. Oh, but they have a lot of liabilities. And it's like this profile of each situation. And the more options I have at my disposal, the more likely I can tell them, yes, I can. Here are the options based on the situation at this moment in time.
So in that scenario I mentioned earlier, I come to you, I've been renting and I want to get a house for the first time. And I come to you and I, give you an idea, like, hey, I have an idea of this stuff, but I don't necessarily have anything on hand. Through
Mhm.
that conversation, that initial meeting with you, you would gather the appropriate info you needed, and then you would take that away and immediately start talking to lenders, or would you need to, would I need to like have my like credit run right then and there, or do you need to get me like my W-2s? What exactly would you need after that first meeting to kind of get the ball rolling?
If you came to me, like the example you mentioned, right? I'm going to ask you how much information you've got accessible to you right then and there. Hey, do you have access to your W-2s for the last 2 years? And if you tell me, oh, no, I have to go and get that, I say, oh, cool, I'm going to write that down. I need to follow up with you and make sure we get that. Cool. Next thing I'm going to say is, hey, how many things do you have that are worth money? How many assets do you have? So then we take note of that. If you can prove it right then and there, maybe you've got it in your email, on your phone, or maybe you have access to that information like Fidelity or wherever your assets are at. You can send me that information right then and there. Great, cool. We'll put that in the file. Then we'll go on to debts, right? Like, okay, what kind of debts do you have? What liabilities do you have that you're still responsible for off the top of your head? Can you prove that? Do you have that information? We can take that with us too to show, the car loan, whatever that note is, the mortgage, whatever it is, other things. So we put all that in the file. So now we've tackled your work, we've tackled assets, we've tackled liabilities. Those tend to be like the biggest ones. And of course, all of those have their own monster of situations within, right? So with a job, for example, if you're not a W-2 employee, then it might not be as simple as you send me your W-2s. We may have to look at tax returns. We may have to look at 1099s if you're a contractor. And then liabilities, same thing. They have their own little things, but we go through it together as simple as possible. And then from there, if you give me nothing, right? Let's say the conversation goes, I'm gonna have to get back to you about all that stuff. It's like, okay, that's fine. And then I tell you, hey, right now, what I can do is I can get you what's known as a pre-qualification. In other words, it's basically an estimation, right? On what you would qualify for mortgage wise, but without anything backing that up. It's just things off the top of your head, what you told me in our conversation. Cool. I can make what's known as a pre-qualification letter. It doesn't mean a whole lot in my personal opinion, but at least you have something to prove from our conversation, right? It's like, great, I've got this.
Yeah.
Now, if you give me all that information and all the proof, and we run credit and we go as far as we can in the process, then that's when we get to that pre-approval. That
Okay.
one's that one's the chef's kiss of being prepared ahead of time for house hunting.
So
So,
there's a distinction then from the pre-qualification versus the pre-approval, which
mhm,
is the pre-qualification is like maybe accurate, right? It's just off of what I'm telling you. Hey, I know this, I know this, I just don't have the documents, or I'm not good with electronics, or I didn't come with my documents, whatever it is. You
mhm,
can still kind of help me and guide me, right? And help me through my searching as far as like, okay, well, based on what you're telling me of your assets, your income, your debts, we're looking at a ballpark of 450,000, right? Or
right.
whatever. That would be kind of your max, or whatever it might be. And then you can kind of work with me, get through something like that. And then until you get that further proof or documentation where then you can kind of upgrade it to that pre-approval letter, which is has a lot more oomph behind it, right? A lot more stamp of the
Yeah.
lender, which will help in those negotiations, right? When I go and
Yes.
find my house, right? Like, oh, me and my wife are looking at houses and oh my God, this is the perfect house. But we hear that there's offers in and we need to get an offer in. But if I can go in there with my pre-approval letter, then it's a lot more solid versus maybe I have a pre-qualification, but somebody else is already pre-approved and and then the seller goes with them instead of my offer, right?
It gives you more of that edge, if you will, when it comes to the negotiations and when it comes to trying to get that house. And again, the pre-qualification letter and the pre-approval letters are only really important before you're in contract. It should be noted because once you're in contract, you're the one that they're going to sell the home to. That's what that essentially means. And so at that point, it's just a matter of, okay, what is underwriting saying about my situation? Because remember, there's another layer here. Once we're past those
Yeah.
initial formalities, now, just like when I come from the realm of insurance, also underwriting's involved, and they're looking out for the lender. Just like the underwriting and insurance is looking out for the insurance company, same idea, but they're looking out for the bank, the lender, the creditor, the investor, whoever they're working for. They're trying to see their best interest, their return on investment. How risky is this? Then they're going to look at everything. So we have to send them all the documentation, and then they either say, "Yep, that looks good. Okay, yep, go for it. You were correct. Awesome." Or they're going to be like, no, actually, I got a lot of questions. I got a ton of questions. I'm going to need you to prove this and this and this and this. They call them conditions in the mortgage industry. So I need you to do all of this before we can move ahead. And sometimes, and I remember this actually from being in insurance, when we would deal with homeowners insurance, people would call us and say, "Oh, I need to change the start date of my insurance policy." Well, the reason that that happens is because they were in contract to close on said date, and everybody wants to see on their insurance documentation that it shows that on that closing date, that's when the insurance policy takes effect. If it doesn't show that, underwriting's not happy about that for the lender, for the bank, right? They're like, "Oh, no, 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 I need to see that it shows their hazard insurance," as they like to call it, even though I know it's just homeowners insurance, but they're going to call it hazard insurance in the industry. So they're going to say, "Oh yeah, the hazard insurance. I need to see that it starts on this particular date."
To back it up a little bit, like
Yeah.
going back to the scenarios. So I come in there, give you my situation. Let's say I don't have my documents. You give me that pre-qualification, kind
Okay.
of work with me, give me an idea, so that way I can contact a realtor or
Mhm.
a real estate agent and start looking. I started looking for homes, and during that conversation, you would have taken note of certain things you actually want, right? Like,
Right.
hey, you mentioned your income was 100,000 a year. Show me some W-2s. Can we work on state bank statements? Whatever it is you might want. Now, during that pre-qualification letter, in that step of the process, are you taking what I give you verbally as far as my understanding of assets and debts and all that kind of things and income? Are you then working with your lenders, like putting it through your software, working out through your contacts to find an appropriate product as
Yeah.
part of that pre-qualification, or are you waiting until we get more to kind of nail down the actual lender?
I would be taking your information that you've provided me or just things that you've told me and trying my best to already start kind of getting an idea of things. Like, for example, one of the things that I would say, even if you didn't have all the information, I'd say, "Hey, have you ever served the U.S. military?" That'd be the first question. If you say, "Yes, I have," then I already know I need to start looking at VA loan options, right? That's the first thing. But if you tell me, "No, I've never served," okay, cool. VA's off the table because the only way to get a VA is if you served in the military in some form or fashion. Then the next thing I go is I say, "Okay, cool. Where do you plan on buying a house? Like, what's the general zip code area, that kind of thing?" And you would, if you had an idea, then you'd tell me. And then I say, "Cool." Then I would go to the USDA's website and I'd start looking up where is USDA loan applicable, because that's based on zip code. That was from the rural people. They're trying to push people to live further out from the main cities. That's the whole idea there, because technically it's like a farmer's thing, right? But I'd look at that next because you can get 0% down on both of those programs, VA and USDA, right? So that's huge to people. They like that whole "I'm not paying anything to get this started" deal. Now, it's not going to do you any favors when it comes to your monthly payment, but people like the whole zero down.
If you make a break, right, as far as getting a
Right.
house or not, yeah.
Yeah, maybe something's changing soon, and this is going to work for that transitionary period, right? You know, you're going to get like a raise, or you know, you're about to upgrade your job in a few months or whatever. Like, it can play nicely to life. That's what I mean with the 0%. And as long as you know that going into it, that's the most important part too. Right? I wouldn't want my customer to have a product that they didn't fully understand the risks they were going to be taking on if there were any risk involved. Was
That's
that?
your job, right? The understanding all these products and the ins and outs of them, and
Yes.
then kind of bringing those to me, right? In this
Yeah.
situation, I say, "Oh, I
Yeah.
answered, yeah, I'm a veteran," or this house is in a rural area. "Oh, well, this option's open to you, and here's what that looks like. This option's open to you." That's all part of that initial consultation.
Yes. Yeah. Well, I mean, it's even in the background too. So, like in our conversations, like this would be things I'm picking up on and taking
Okay.
away, adding to the profile and trying to figure out, okay, what's going to be good for him and his family, right? Or her and her family, or whoever I'm talking to. And as far as the process goes, after USDA, then that's when I look at FHA. If this is your first time buying a home, or perhaps your credit's not so great, then I look at FHA, Federal Housing Administration, because they've got some flexible options in that direction. Very low down payment, 3.5% for the credit score, somewhere between 580 and 620. They make it eligible. But of course, that also is based on the lender. That's a confusing part for a lot of customers. It's like, well, I thought that there was no minimum credit score required for the VA loan. It's like, you are correct. There is no minimum credit score required for a VA loan, a Veterans Affairs loan. However, the lender who's going to fund that VA loan, they have their requirements. And so that's when the credit score would impact that client. So that can be confusing because it's like, well, the program doesn't have a minimum credit score, but the people who are actually going to give you the money, they do. Right. So it's distinguishing the difference between the entities.
And those are the exact, the lenders, right, that are actually administrating some of these products.
Mm-hmm.
Those are the exact people that you're going to interface with on my behalf, right?
Yes. Their underwriting department.
Working with their underwriting, like, hey, we need this document, we need that document. You will be the person that's going to get me to the finish line. You'll be my point man from beginning to end, right?
If it's an ideal mortgage loan officer experience, then right, I should be the only one you're talking to, and I should only be talking to you when I need something that I don't have, that I can't figure out based on what you've already given me. Those are kind of important things there, because obviously I want to involve you with updates on the situation as we progress. But I also want to make sure that I'm not bothering you too much, because that can worry people when you call them so much, right? It's like, oh my God, this, oh my God, that. So it's really good to have very conclusive and very complete conversations when we have them, get as much of the information that I can, start piecing it all together in the background. And then as we have additional conversations and as I get additional information, then that you can already start to see how that's the experience, right? It's like, that's a part of what makes you feel good. It's like, well, I gave all the information to this guy, and then he gave me my options and I chose, and I feel good about my choice.
So in this scenario here, I'll be working with you on all the financing and getting my ducks in a row. So that way, when I go putting in offers on places, I have a stronger position. And I also just know myself, you're going to educate me on terms of what options, what they mean for me and my goals. You're trying to find the best product that fits for what I'm trying to do. But then outside of you, I'll be working with a real estate agent, maybe, or direct to the seller. As far as those are the people that'll be interacting, right? It'll be you're handling all the financing, and then having some kind of real estate agent or on the actual buying and putting in the offer and getting a contract underway.
Yes. And here's another thing that I feel is very important to mention, especially since this past summer, we had the NAR settlement that occurred with the real estate agent. Right. In most, if not all, real estate transactions, you're going to be dealing with a loan officer and you're going to be dealing with a real estate agent. Now, there are situations where people like to cut out the real estate agent, especially on the buyer side, because they feel like maybe they come from the industry, for example, or they just don't want to pay anybody to represent them. It's super risky. Like, representation is very important. I want to say that if you want to have a decent chance at the negotiation table, and you also want to understand what you're getting yourself into before you get yourself into a lemon house or whatever it might be. There's a lot of experience and expertise that real estate agents bring to the table. And that's why they're important to represent you as a buyer, because the sellers are going to be most likely utilizing a real estate agent also. They don't have to, but they could, right?
Yeah.
We could cut out either one of those entities from the situation, but it's just like, well, how well did the deal go? How much information did I have to know to make this make sense for me? And how long did that take for me to sell that house? And how long did it take for me to get that house, right? Those things are kind of up in the air. Your mileage may vary, right? Depending upon your experience, depending on what you know about things, and also depending on the actual situation itself. There's so many circumstances at play. So I always recommend to have representation. Yes, there's money involved. People got to put bread on the table at the end of the day, but it's important. And I feel like the loan officer part of it, you pretty much can't escape. There needs to be a loan officer involved, unless you're paying cash. That is the only way you can not have a loan officer involved.
Yeah.
If you're going mortgages, there's a loan officer at some point along the transaction, because the real estate agents, unless you're in California, can't both be the loan officer and the real estate agent. You can do that in California though, but it can be very difficult because they're showing people houses, but then they're also going back and they're making sure they're following up with everybody and doing loans and
Which brings up one of the questions I have. So as
Yeah,
far as when I'm taking advantage of your services, right? You're my guide to the lenders and the financing, the underwriting, all the actual money side of things.
sure.
Purchasing power, securing the loan, get funding the loan. But there's limits to what you do, right? You would not be telling me about, hey, houses in this zip code, or like I know a house there. That is where the role of a mortgage loan officer, or such as yourself, that's where that would kind of end. Outside of personal advice, right? But
I mean, I think it depends. If you wanted, if, let's say you had questions related to the finance, then obviously that's our bread and butter. But when it comes to other things outside of the scope of the home purchase, well, a vast majority of loan officers are going to be educated in the finances beyond just homes. Like, because we got to know about credit. People need credit in order to qualify. So we're going to know a lot about how to fix credit. We're going to know a lot about how to repair it.
oh,
That
okay,
doesn't mean that we're going to be credit repair services, right? That's a different industry altogether. We can give you some pointers, right? We can make some
exactly.
suggestions that can help if, for example, I could break down the FICO score and all of its different percentages and tell you what you could do in order to increase it. I think I even have a machine that will take a look, AI, that will take a look at your credit and tell me, okay, if they do these things in this order, then that will increase their score by X amount of points. Now, however long that takes, obviously, that's going to be dependent on the person because that's another factor that a lot of people don't know is that with loan officers, we can only go as far as the person's able to also. So if your credit's really bad and you don't improve it, we may not have any options to provide you at the end of the day. No lender's going to take that on.
That scenario, though, you might, depending on the loan officer, and then let's speak particularly to you and your brokerage, still might be able to have a relationship and kind of give tips on like, hey, maybe we can't do anything now, or what's offered to you, it doesn't look like it's something you want to take at this time. You do these, you can kind of give some advice and kind of have that correspondence over 6 months, a year, 2 years, and be like, hey, if you do these things, it's going to open up more options with more lenders. Is that what you're
Oh,
saying?
because the customer profile, right? Because the thing of the matter here is that we have to try and make this customer qualify for a mortgage with a lender. But if their circumstances are bad, we can't control that, right? We can't control the person's circumstances. We can merely say what is the issue that we're having at the time of our conversation as to why we can't move forward.
Give guidance.
Right, exactly. And then they have to actually hit the ground running and do the things that are needed to be done to then better prepare. And right, if you're doing it in the new age, modern day loan officer direction, then you're following up with people, the nurture direction, if you will. And I'll just throw this out here since it's going to be on YouTube here in the upper right hand corner. When I eventually make my video on credit, you'll see that they're available when it's there. Well, I break down a lot of the frequently asked questions and just really break it down layman's terms and explain all of this in far more detail. So definitely check that out after this video. But what I would say is they'll take out their day on the loan officer. Let's just put it that way. If they don't qualify for that home or something goes off the rails or something gets more expensive, the most likely, if the loan officer is doing their due diligence, they're probably going to be the ones that get the customer service experience with that client. They're going to hear about this, but it's a relationship. That's what it is. It's supposed to be a lifelong thing. If the loan officer is doing it the right way, then everybody they talk to, it's a lifelong thing. They're always looking out for them. They're always trying to see, hey, 3 months, 6 months down the line after the house is closed on, hey, do you need help? Do you need to refinance? Do you need anything? Do you have anybody in your life that, because I mean, that's the only way that loan officers
Interesting.
can make more business is by that referral direction.
And that brings up a great point, which is part of, you just mentioned it. I guess mortgage loan officers are not just helping you buy property, right? You're also helping serve the existing financial needs on an existing property you may already own.
Exactly. Refinance boom is like loan officers' haven of like consistent income, especially when you're not working for a bank. If you're not working for a bank and you don't make any money from a direct lender, like myself, then the way that you make money is when the loans close. That's it. You don't make any money up until that moment, period. That part can be quite frustrating because people can shop you. That's a thing. If you're not giving them the best experience, they should shop you. That's what this is about. It's a relationship business, but it's also an experience business. Are you answering the questions? Does it make sense to them? Do they have options with you? If you can't answer those questions, yes, then it's likely you'll get shopped, or that's just not the best experience for that client, period. On the flip side, what are the client's circumstances, right? So, I mean, if the client's circumstances are horrendous, then you need to come at it from, like you were saying earlier, James, guidance, right? Guidance, kind of being that light for them to find their way. And in a few months or maybe even years later, then it's like, cool, my credit's better. I've paid off those debts. I have more assets. Let's go get that home.
If I understand correctly, based on what you said,
Mhm.
if I make an appointment with you, right, and I engage your services and consultate, I go over everything, I tell you what I'm trying to accomplish, and you kind of advise on that, and we work through that. I don't actually have to pay you anything, right? Like I
Right.
don't actually pay you anything out of pocket. This is something that unless we close the deal, I'm happy and everything works out. I don't owe you anything.
That is correct. Services rendered are for a loan officer specifically only occur when the mortgage closes. Like when then that transaction is complete. That is the time when services have been rendered technically. Now, there are some things that can be charged ahead of time, like the
Yeah.
credit report, but we as loan officers are not seeing any of that money. That's going to whoever, whatever company,
Yeah.
whatever service is providing that. But that's one of the earliest things that we can charge for at the beginning is pulling all the scores or however many scores we want to pull
Mm-hmm.
from credit. So that one's good because then we get that better picture of where you are and what we need to do in order to make sure we're in an ideal qualification, also kind of a situation. And we want to know that ahead of time because obviously the earlier we know, the better that experience because then you just won't get your hopes up on something that you just would is out of the cards, right? It wasn't in the cards because your finances were in disarray and it wasn't the home that you could get. You couldn't qualify for that home at that price. You had to go for something smaller or something older or whatever the circumstance may be that caused that home to be at a lesser price. You have to go in that direction if you truly did need a house. And those are hard conversations to have. It's not easy, but I think it's very gratifying, right? I think that that's one of the things that we kind of become financial coaches in a lot of cases, advisors to a lot of people. We do more than just the mortgages. If we're doing it right, we're doing more than just the mortgages.
There's no downside, right, to engaging your services. If I'm somebody who doesn't know how any of this works, you'd be the perfect person to talk to about finding out, right? Like I could talk to you, consult what my existing financial condition is.
Mhm.
You know, you can have ways of maybe helping me improve that as far as guidance that way. So that way, if nothing fits right now, we can, purchase a home down the line or work with whatever we're trying to accomplish. So you would encourage people to just find out. There's no downside. It doesn't hurt them to find out what their situation is. It doesn't cost any money. I don't have to sign a contract with you, right, to have a meeting and figure this stuff out.
Loan officer direction. And again, be careful of bad actors. But at the end of the day, you should be able to reach out to a loan officer. You should be able to ask your questions. You should be able to get your answers. And the only time that loan officer may say that you have to pay them anything is if they want to pull that credit earlier on to get that better picture of things. Otherwise, you don't have to do that. We can do a soft pull. We can see maybe that costs less, soft pull versus a hard
Yeah.
inquiry, because that can also affect your credit score, but not by much. Should be noticed a few points if we do the hard pull. But yeah, at the end of the day, the only person it's going to hurt is maybe the person who you're talking to and their situation, because maybe they weren't ready to hear
Yeah.
that news, or maybe, but that depends on the person, right? But will it ever hurt to know the truth and know what the real options are? In my personal opinion, no. But your mileage may vary on how people interpret.
Yeah. Well, it's empowering, right? Like
Yeah.
I think there's a lot of people out there that could get a home or could really change their situation for the better.
Hmm.
And the only difference between where they're in now and where they could or want to be is engaging with somebody and finding out what's out there. They just don't know. I mean, you've taken the time to educate yourself, train, study, work, all that kind of stuff. So you know how that all works. But me as a person clocking in 9 to 5, I don't know the first thing about how this is going to work or what options I have. So I just know I'm not unhappy with what I have, or I want to upgrade, or I want to make repairs on my home or whatever. You have all the solutions to that.
And that's why it's really important to have that healthy relationship with financial advisors in general, not just loan officers, but people who actually can tell you what you can and can't do with your finances is important too. So CPAs, tax advisors, financial advisors, they have their place and their role to play. And they make great referral partners for loan officers a lot of times because people that are taking advantages of those services, we kind of complement and we can reach out and tell them. We can also connect with your real estate partner as well, the one that you're having you show the homes. Maybe we're not connected like that yet. Then that's something that can be a part of that referral direction, if you will. And we can work with them hand in hand. So they have the information too. So they're in the loop. So you don't need to go to your real estate agent word afterwards and be like, My loan officer told me all these things, like they don't have to communicate it. We can communicate to all of the related parties as we go along. So I've seen that maybe a few times where they communicated to the CPA or the financial advisor, they represented them, and they would go to them and say, "Hey, these are the options we have. Look it over, and then talk about it with your client." And then you can come with me with your client. We can talk it over, make sure it's still in their financial best interest, because the loan officer can't make that call. We can say like, "Hey, I wouldn't recommend that. I would suggest maybe otherwise," but we can't ever tell them you have to do this.
A mortgage loan officer, though, they can advise against a product, but they can't sell you on a product, right? It's just kind of like, here's your options. Like, where's the line with that? Like, if you can expand a little bit, or is
Yeah.
that or is that something where it's being drawn every day?
Personally, ethics wise is where we start digging into there. There is no limit to how many things I could offer you. And if there's a better incentive with something else, I could totally offer that and not tell you that there's an incentive. I don't like that personally, but that can be done as long as you qualify for it. I like to make sure that whatever I'm offering is going to fit what that person needs at that time in their life. So if they've told me their goals, then I want to make sure I'm picking only products that fit that goal. And then I would only pick different products if it meant slightly different expectations, because there's no point in offering three of the same thing, right? So it needs to be like, okay, this one's a little different here. Maybe it's a little less on the front end, a little bit more on the back end, or some mixture therein, or it's like a really risky product, but knowing what I know about them and their situation, this might work really well because I know that they're going to get out of this house before the riskier part of this loan starts, like with adjustable rate mortgages, for example. That's a pretty good one that people use. Or they're moving, right? They're moving from one state to another or another house to another within the same state, whatever it might be. And they need to make sure they get the new home financed, but they still haven't sold the old home. So then we do some creative financing where it's like, okay, we've got the main primary mortgage. It's a down payment of 10%. They want to avoid mortgage insurance. So we need another 10% if they're going Fannie Mae, Freddie Mac. The conventional direction is what that's called. So we need 20% down to not have mortgage insurance. But they have a house that they need to sell. Okay, great. We can do 10% down. Then let's finance another 10% as a second mortgage. Put that on the same home, second mortgage. Boom. Now we got 20%. Awesome. They sell the house, they pay off the second mortgage. Now they're back down to where they need to be. And they avoided mortgage insurance out of that. So that's an example of creative financing. And like I said, it's very specific to someone moving from another house to another house and you still need to sell it. So as you can see, there's a lot of intricacies that are involved here. But ultimately, creative financing is very powerful. It's one of the edges that we have as loan officers. How much creative financing can we offer our clientele versus others that really helps to show more value, I feel, than if someone doesn't offer that or doesn't even know about it.
So let's say I'm looking for purchase another home,
Uh-huh.
and let's say I've already bought a house, right? It's not my first house. I already have a mortgage company. I have, had an experience already.
Uh-huh.
I'll use mine, as a specific example, Rocket Mortgage, right? I'm looking for my next house. I will engage with them, right? And see what's going on their side as far as what they offer on the financial side. But am I able to engage with multiple, like,
Yeah.
entities, like multiple mortgage loan officers? So let's say I want to get an idea of what I've already used before, but I still am interested in, like you said, if you're working with 120 plus lenders and there might be something better than what I'm used to, and I just don't know about it, and that's something you can help me figure out.
Yes.
If I consulted with you and worked with you with my information and we started that process, is there any issues? Is there any conflict? Am I able to engage as many as I want to?
The customer has to think of themselves as the boss. They're the boss. They hire and they decide to listen to advice based on what they need and what they want. So, yes, to answer the question, you can go to multiple loan officers. You can go to multiple real estate agents, even because some real estate agents, they specialize in certain types of houses and also certain ranges of the expense of said house, like the value of a house. You're going to find that there's a plethora of different real estate agents that specialize. You can find all this out through websites like Zillow or Realtor, or maybe you get suggested by a friend who maybe they bought a home that's similar to what you want. And you can ask, like, okay, well, which real estate agent did you use for that? And then they can tell you. And then with loan officers, we're lesser known, obviously. Pre qualifications and pre approvals are huge as far as the initial conversations. And what's even better is that, let's say you don't have a real estate agent that's representing you, then will definitely know a real estate agent, and I can give value to that real estate agent by saying, hey, I've got this person already pre-approved for this. Can you help them find a house? So that's cool too. So I can give back to my real estate partners by representing my clientele as well.
So I could come to you
Yeah.
from from the start to finish, right? If I have
Yes.
any property transaction that you're able to do, I
Mhm.
can come to you with like, hey, here's my goals, here's what my situation is, and then you can kind of own that and guide me through it from beginning to end as far as we get everything taken care of on the financial side, right? I get pre-approved or whatever that,
Mhm.
however that ends up. But now you can maybe refer me to an actual real estate agent, so that way we can go look at properties and then do that whole thing, and then just go through all the way beginning to end. That's something that I could start in with you.
As far as the beginning and end, let me be very clear about expectations here, right? In the beginning, we would learn about each other. Now, mainly about your financial situation and what your goals are, if that's where the conversation goes, right? Preferably. From there, depending on how that goes, we have got something out of that. Pre-qualification, pre-approval, one of those two usually, right? Now, that's where the customer has to make a decision. Do I want representation or not? If they want representation, which is what I suggest for most clients, then that's where I would ask, do you have a real estate agent in mind? If they say yes, great. I don't want to get in the way of that, but I probably get their information so that I can be involved in the transaction and update that real estate agent and maybe make a new real estate partner at the same time. It'd be fantastic. But if they don't want to be represented, then I would suggest that they shoot for representation. And then I'd say, hey, I've got some real estate agents that can represent you. And then that's really up to the client at that point, right? Their experience is up to them too, to some degree. So after that, when they're looking for houses, whether they got representation or not, we don't talk again really unless they have questions about financing. But basically, we're not going to talk again legitimately in the transaction until they've found a house they want to get, and hopefully they're in contract. And then we can start moving along with, okay, what product would be good for this house and these circumstances. I'll already have some products probably,
Mm-hmm.
you know, in the chamber just in case, but until they've decided on what home they want, that can dictate product also, right?
Yeah.
Customer's profile and situation and what home are they trying to get and at what amount, that can dictate what products are available too. So that's when we talk about that. I want to try and present at least 3 to 4 options in most cases. That's what I'm trying to shoot for, because when you have options, not only is that flexible, but also it shows you what is going to be best, and then you can make a better decision. I don't want to give you 10 or 20 options because you're going to get fatigued, right? That's going to be exhausting and you won't be satisfied with your choice. I want to just present you with the 3 or 4 best possible options based on what I know about you and what I know about your circumstances and the house you're going to get. And then from there, once you've made your decision, then that's when we start working with underwriting to get you through that part of the process. And then we bring it into the title direction. Okay, we've got underwriting. Everybody's happy there. Cool. Let's go to title. Let's make sure everyone's happy on title. That's basically getting closer to closing. And if I'm in the same state and I can physically be present, then it's good on the loan officer to like show up to the closing or doing things in person if you can. If not, because again, I'm licensed in multiple states, then I'm gonna have to do something like this, like in Zoom for the meetings. And then when they actually close, maybe I call them or we do a Zoom meeting live there at the thing, whatever their comfort zone is. But I want to be a part of that too. I feel like that's really important because we went through the trenches together. Let's finish this together. And that, in a kind of a nutshell, is the whole process for better for worse, right?
And then after that, further down the line, right? Like let's
Yeah.
say what we mentioned earlier, the adjustable rate mortgages. I'm ready to move. I said, hey, I was going to be here for a couple of years, but I
Mhm.
have a career that's going to take me out of state, or I'm going to be moving and selling my home. And we talked about many years ago what that would look like as far as refinancing or picking up a different place, and that's where I can reach back out again and start the process all over.
One of the cool things that I'm going to do when it comes to closing on homes, one of the most important things we can do as loan officers is, let's say maybe after a week goes by, we reach out to the person who we help close the home with. But before we do that, we make sure we understand where they're making payments to. What's the website? What's the app? Whatever it is. Make sure we know that ahead of time because we can see like which is the mortgage servicer. That's what that's called, right? So I can find out what that is ahead of time, reach out and say, hey, how's the move coming along? Everything going good? Do you have any questions for me? Hey, check it out. I wanted to tell you that when you're ready to make your first payment, which is a while, it's usually a while from when you close. When you make your first payment, you can go to this website or check out this app, give them that information. So my call was not only to check on them, but it was also to share that information so that way when it's time to make that payment, they'll know where to go and what to do. And that adds value. And then from there, ask them, is there anybody else you think might need help or my services? And then also know that when you're ready to refinance, maybe there's a project you want to do. Maybe you want to get the equity out of your home. Maybe the home appreciates and you want to get that equity out to do something with your family or what have you. Let me know. I'm here for you. And then they become in my nurture bucket of people, and I probably follow up with them 3 to 6 months out and send emails and send cards and things like that. There's a lot on the behind the scenes when it comes to referrals and really working your database and really getting into helping your people and showing that value because you got to be top of mind. That's the other thing too, especially with loan officers. Real estate agents, I don't need to worry about that too much because they're
They
going
got the
to
billboards, right?
right. Yeah, exactly. So they're gonna do that. But with the loan officer, what can we do? If this is gonna be a lifelong thing, then it needs to be. My only quarrel with it is that currently I can't do all 51 areas in the United States.
Yeah.
51 because DC is one of those areas. But because they move to a state that I can't do, then can't really help them with the loan directly. Because as an internet loan officer, influencer in a sense, I'm going to get calls from people from those states and I won't be able to help them. So either I have somebody in that state that can help them, or I have to just tell them, sorry, I can't help you, which I don't like. I don't like that.
Yeah. Hopefully with your videos and your advice and different things, there's lots of ways to provide service. Although sometimes with a mortgage loan officer, you might only get paid at closing, but there's lots of ways to nurture clients and customers and help them out. And then you never know where that leads to as far as referrals or
Oh yeah.
whatever it may be.
Education is a huge piece for me. James, you know me for a while. Education is a huge piece for me. And I would say in this space, it's especially important because, again, buying a home is probably the biggest financial transaction of most people's lives. Like, vast majority of people, this is the most expensive thing they'll ever buy. So they need to be educated in terms of how can they set themselves up for success and what are the moves they can make today in order to ensure that however long it is from when they need to get a house, when that moment's going to happen. And maybe renting is the better option. That's something that we just have to kind of look at ourselves in the mirror and decide if it is or isn't. But at the end of the day, you've got more options when you have a home. There are more responsibilities because of that. Obviously, phantom costs, maintenance, you name it. James, I know you know exactly what I'm talking about. It's the give and take, the ebb and flow of ultimately one of the more expensive parts of our monthly budget is shelter, right? So you have to decide what's right for you. And obviously, talking to a licensed loan officer like myself, one that's trying to be fiduciarily available and put your best interest above my own, it's very important. It won't cost you anything but time, right? Time and maybe a sting of like, what do I need to change in order to improve my situation?
Yeah.
But that's ultimately because we're not going to charge any like ethically we're not supposed to be charging anything. So if you talk to a loan officer and they charge you for something and it wasn't services rendered, you should report that to the CFPB immediately. Yeah, CFPB, they're the guys that took over everything once 2008 happened, just so we've got a little context there. I mean, go to their website, put that probably up here in the show notes. But if you see any sort of malicious activity, report it because you're probably not the only one that's going through that. There are 3 different versions of a loan officer. We'll start with the bank. The bank loan officer works for the bank, right? So they're just receiving calls like a call center, and they're just helping people get homes through the bank's database of people, right? Whoever have bank accounts with them or other financial tools.
I think most people are familiar with that.
Yeah.
That's the idea of we think, oh, I need to get a mortgage. Let me go talk to my checking account people.
Yeah,
Let me talk to my bank.
The advantage of the bank mortgage loan officers is going to be that they can do business in all of the states, all of the areas, because the government trusts the banks. Beyond being licensed with the NMLS, they may not even need to be licensed. Like they may not have to take that test, in other words, as long as they are with the bank. They have an NMLS registration. You just with the website, hey, I'm this person, cool. I'm with the NMLS. Get my ID. You can see my ID there and my username, right? You get one of those. And then you don't even have to take the test. You work for the bank. So the bank's got you covered as far as that piece of it. So they train you, you do everything, and then you start taking calls like a call center and you get very little commission. That's the disadvantage. But you get a lot of experience with going through the different loan options, talking to people, but you can't take those people with you when you decide to go independent. That's the other issue. Is like I know all these people. I've worked with so many people over, however many years, but you're, up the creek without the paddle there. You have to start over. And then there's the direct lender, which is not the bank. Direct lender is where you're with only one lender and only what they have to offer is all you can offer. So you may have to turn people down if their situation doesn't fit in your little box of options. So the direct lender, what's nice about the direct lender though, is you'll be very familiar with what products you offer and what they do and how they work. But you're going to have to go and get licensed in all the different states wherever you want to do business, and it's very expensive, right? You got to get background checks, you got to take educational pieces, and that's every single year. I come from the land of insurance where it was like every 2 years. No, it's every single year. You have to redo your education, continuing education, and that kind of thing. And then finally, you have what I am, which is a broker or a brokerage. And our advantage is that we have the most flexibility. So I can work with tons of lenders. I'm kind of the middle person of the transaction, if you will. I can work with a ton of lenders, look at a ton of different options, depending on where my brokerage is at and what they can do and in what states. And then, of course, what states that I'm licensed in to do business. That's kind of the different pools of the different loan officers. Now, why that's important to note as a customer is because if you go to a loan officer and they don't offer you much, or they say, hey, sorry, can't do anything for you, then they probably in one of those first two buckets I mentioned. But if you come to me, that is, unless your credit is horrendous, it's unlikely that's going to be the case. We'll probably find something. Now, whether or not that's something you should do is another thing. I can't tell you, oh, you have to do this. I could never do that. I remember when I was in insurance, I should say, I could do that. I could tell people what coverages they needed or what coverage they didn't need when I was licensed in the insurance industry. But as a loan officer, we just have to show them all the options that they're eligible for, they can do, and then suggest which one based on what we know about the situation. And then the person chooses ultimately. Even if it's a terrible, like they're going to be house poor, as it's called, right? All of their money goes to the house and they have barely anything left for food and everything else that life entails. That's house poor. Even if they're going to be house poor, but that's what they want to do, we got to do it.
We kind of talked in general, right, about mortgage loan officers and kind of, just some general stuff in this Ask Me Anything. So where can people reach you?
Yeah. So I'll put all my information up here. There should be like a QR code and URLs in case you don't want to like scan or do any of that stuff. My company is David James Investments, so that's my own personal LLC. If you're viewing this on YouTube, make sure to like and subscribe. That's very important. It gets this out to more people that need to learn about what loan officers do and also what you need to do in order to prepare for home ownership. And I'm sure this won't be the only AMA or Ask Me Anything session that we're going to have here, James. I'm almost 100% positive on that one. Well, perfect. Well, guys, appreciate you tuning in and checking this out. Again, my name's David Dowd of David James Investments LLC, and we'll see you in the next one. Until then, guys, be blessed and have a great one.